I think more and more people are going to start embracing it again. Unfortunately, the price is going to be a lot higher by the time they do that. I don't know that 3,000 is going to be enough.
Yeah.
Maybe 5,000 will, who knows? But whatever that point is, we're going to find out because gold's going to keep going up. Maybe it's going to take a big crash in Bitcoin to kind of wake people up to the difference.
Mm-hmm.
But or maybe a big drop in the dollar relative to the other fiat currencies that are out there. I mean, gold's gone up to almost 3,000 in an environment where we've had a strong dollar, which is normally a headwind for gold.
Over the past 5 years, the price of gold has increased by more than 82%. With bars of gold bullion typically weighing about 400 ounces, current gold prices mean each bar is worth more than $1 million. Precious metals dealer Peter Schiff expects rising gold prices will be the tipping point for broader market attention. He underscores that gold has surged despite a strong U.S. dollar, which is typically a headwind. Demand for gold could be driven further by a pilot program in China that allows the country's insurers to buy gold for the first time. Bloomberg cites Minsheng Securities Co's estimate that this could add approximately $27 billion worth of new gold demand into the market. In his assessment, Schiff discusses the ongoing gold rally and why American investors have been selling gold despite its 50% price increase. He explains that many are financially distressed or prefer to gamble on tech stocks and Bitcoin. Since the beginning of the year, gold has outperformed Bitcoin. Since January 1st, gold has increased more than 10%, while Bitcoin has managed less than half that. Moreover, over the past couple of weeks, gold has been smashing one all-time high after another. Reflecting on his experience, Schiff acknowledges that while he has invested in gold mining stocks for 2 decades, physical gold has outperformed many. Gold stocks, despite their gains, really do look like bargains. The VanEck ETF trades at just over 12 times 12-month forward earnings, a 44% discount to the S&P 500's 22 times, a much wider gap than the 10-year average of 20%. Narrowing the price-earnings gap to that average discount would bring the ETF up to just over 16 times, landing it again at $51. Despite gold's strong performance, Schiff notes that mainstream financial media downplays its rise, often attributing it to geopolitical tensions rather than underlying economic issues like inflation. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The central banks are a big part of it. And I'm sure there's, other demand, mainly coming from the East. So I'm sure the Chinese public, India, countries like that, they're still buying gold. Americans have been selling gold. They sold a lot of gold last year. They sold a lot of gold stocks. I mean, they've been selling into the rally the entire time. Gold's up about 50%, and they've just been sell.
Why do you think that is? Because they need money?
Well, in some cases, it's because they need the money. In other cases, it's because they'd rather use the money to buy tech stocks or to buy Bitcoin or MicroStrategy or something. So they're either gambling with the money or they're using the money to buy food. It depends. It depends on their circumstances. Yeah. But there isn't a lot of investor demand or demand for gold, in the general public. They don't understand gold, and so they're not buying it. And if they own it, they tend to be selling it. Now, of course, that's not true with everybody. I mean, there are plenty of people who still believe in gold and still buy it in the United States. And I think more and more people are going to start embracing it again. Unfortunately, the price is going to be a lot higher by the time they do that. I don't know that 3,000 is going to be enough.
Yeah.
Maybe 5,000 will, who knows? But whatever that point is, we're going to find out because gold's going to keep going up. Maybe it's going to take a big crash in Bitcoin to kind of wake people up to the difference.
Mm-hmm.
But or maybe a big drop in the dollar relative to the other fiat currencies that are out there. I mean, gold's gone up to almost 3,000 in an environment where we've had a strong dollar, which is normally a headwind for gold.
Yeah.
And I think the strong dollar has been a headwind because gold would be a lot higher than 3,000 if the dollar was weak against other currencies. I mean, it's weak in terms of what it will buy you. But on a relative basis, the pound or, the Canadian dollar, whatever, have been even weaker. But that will turn around, and we will start to see the U.S. dollar falling in relation to those other currencies, and that will really kick this gold rally. The financial media wants to, push the narrative that everything is great, that the stock market is great, the bond market, the economy. So, gold is saying that that's not the case. So they don't want to acknowledge that warning. So they dismiss it, or they try to come up with another rationale for why gold is rising. Oh, it's all the geopolitical uncertainty,
Right,
so don't worry about it. It's not rising because the Fed has got monetary policy wrong, or because there's a debt crisis coming, or inflation is going to rear its head in a bigger way, right? No, don't worry about any of that. And of course, Wall Street doesn't really make a lot of money in gold. They make money when they're managing your stock portfolio, or you're trading stocks, and they're charging you commissions and stuff like that, or they're lending you money against your stocks so you could buy more stocks and they could charge you interest. So they don't like it when people just buy gold and take their money away from that system and just put gold bars, in a safe, right? They don't make any money off of that. I mean, I make a little money off of both. I mean, I sell gold. I mean, we have a company, Schiff Gold, and people buy gold and silver from me. I make a lot more money when they give me their money to manage at Europe Pacific Asset Management. But that doesn't stop me from telling them to go buy gold too and buy silver. I think people should have gold and silver, but not with everything. And I mean, I manage portfolios. Now, some of the portfolios we manage are mining stocks, so we do that too. And I think the upside potential there is enormous. Now, I've thought that for quite some time, and I would have been better off in general just buying physical gold. Physical gold's gone up 10x since I started buying mining stocks 20 years ago. I got a few mining stocks that have gone up 10x, but most of them haven't even come close to that. And on average, if you look at all the gold stocks I bought, had I just bought, the best ones, the ones that did the best, but I mean, in hindsight, I didn't know that. I was, being more diversified. But I would have been better off just buying physical gold.
The U.S. dollar has been the backbone of global trade and finance for decades, serving as the world's primary reserve currency. However, recent geopolitical shifts, economic uncertainties, and inflationary pressures have made many nations rethink their reliance on the dollar. This movement, known as Dedollarization, is driving countries and investors alike to seek safer alternatives. Gold. Renowned analysts, including Peter Schiff, note gold as a stronger reserve asset than the U.S. dollar, offering stability for central banks and global trade. He expects countries will shift away from the dollar due to its declining purchasing power and rising debt. Schiff also argues that nations want to reduce reliance on the dollar to avoid U.S. economic influence. Gold, however, has historically retained its value and even appreciated during inflationary periods. In the 1970s, gold surged by over 500% during high inflation, proving its worth as an inflation hedge. According to Schiff, tariffs are hidden taxes on Americans, not foreign nations. He argues that spending cuts should target major expenses like Social Security and Medicare, but the government avoids them. Instead, tax cuts fuel consumption without solving economic instability. Let's get back to the interview.
Gold is a viable competitor to the dollar. I think that central banks have a choice as to what asset they'd prefer to hold as a reserve to back up their own currency. And I think that gold, hands down, is a better place for central banks to put their trust than the U.S. dollar. Because, the foreign central banks don't use the dollars really as a payment mechanism. They're holding in reserves. Now, as far as, what other currency private companies could choose to trade in, I think gold also works a lot better than the dollar. And I think, making and facilitating payments in gold is relatively simple. And so that can be an alternative. So you don't have to say, well, there's the euro or the yen, they don't look so good, so the dollar is going to win by default. I think all those currencies could lose against gold. And I think that's what's going to happen. I think countries are going to move away from the U.S. dollar because its future purchasing power is going to be in doubt. And, the bigger the debts grow, the greater the likelihood of inflation, and much higher than the inflation rates that we're experiencing now. And so there's not a lot of certainty as to what the dollar is going to buy in the future. And so it's not really viable. And I think that we take advantage of the dollar status to try to exert, our will on other countries. And I don't think they want to be put in that position where they're beholden to the whims of U.S. presidents if they find something about their policy that they disagree with, that they could use the dollar and their reliance on the dollar as a weapon against them. And I don't think that's very appealing. We've seen a lot of destructive policies, so I don't know that tariffs are any worse. The government needs to raise more revenue, so tariffs are one way of doing it, right? I mean, we have huge deficits. I think it's misleading to try to tell the public that they're not going to pay the tariffs, that Canada's going to pay them or China's going to pay them. No, they're taxes on Americans. Americans are going to pay the tariffs. But Americans have to pay one way or another. So, that's the bad news because, we have too much government. Now, I would much rather see big cuts to government spending than higher taxes, but we got to have something. Now, they are trying to cut some spending. They're going after waste, fraud, and abuse, which, of course, there's a lot of that, but that's par for the course in government. I mean, there's going to be waste, fraud, abuse in every government everywhere in the world. And the bigger the government, the more of it there's going to be. I mean, we've got the biggest government, so we probably have the most. But, they're not going to get rid of all of it. I mean, I hope they get rid of a good chunk of it. But that's not going to solve the spending problem. It'll mitigate it a little. But the real spending problem is in the stuff that they won't touch. Social Security, Medicare, Medicaid, all these other income support programs, the veterans benefits, the defense budget, the interest on the debt. 90% of the budget is kind of like sacrosanct. So they're just playing around with a small portion of it. And even if they eliminated it entirely, it wouldn't solve the problem. And meanwhile, the tax cuts are going to add to the debt. Are they going to stimulate the economy? Not really. In fact, most of them will just stimulate consumption. If you think that's the economy, you cut people's taxes on their Social Security. These people, they're not going to save that money for their old age. They're already in their old age. They're going to spend it. They're gonna enjoy that extra income that they don't pay taxes on. The waiters and waitresses and bartenders, to the extent that they have higher income, they're going to spend it.
The market is nearing that point as gold closes in on $3,000 an ounce. Now that gold stocks have started moving, investors will likely be willing to pay higher multiples to own them. As central banks and global investors increasingly turn to gold, could we see a future where gold plays a more dominant role in global trade and finance, potentially challenging the dollar's reserve status? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.